Hey traders, checking into the stock market today. Mostly a sideways day, fairly range bound, but some sectors showed us relative strength and others showed us relative weakness. I'll go over some trades I took in NIO and in the biotech sector, and we'll see what we're looking for in the short term for the rest of the week. All right, so we had a broadening wedge on the morning on our futures charts, which really helped with guidance as far as not being faked out because we broke the pre-market high with no follow through, but we were watching this on the 15-minute time frame, and again, just a great signal for when an individual name, essentially I'll look for an individual name setup, and then I'll watch the S&P 500 in the broader market, and wanting to obviously see what the broader market, I want to see it align with the direction I'm looking. So if I'm looking short on the energy sector, I need to see the S&P 500 reject from this uptrending megaphone resistance. And if I'm looking bullish on the biotech sector for a bounce, I need to see the S&P 500 bounce off of this support. So it is definitely a factor when looking for trades, and you can see we bounced. Once the bell rang, we hit support, we hit resistance, we bounced off support again. I need to adjust my line a little bit here. And then we just ended in an equilibrium and in a tightening range. And so I'm going to keep these lines on here, again, just visual guides into tomorrow in case they come back into play, because if we were to break bull and get some follow through, it's still possible we set a 4-hour lower high rejecting from this resistance line. And if we break bear, it's still possible that we see a lack of follow through and bounce off this support line. And the NASDAQ had the same thing on the 15-minute time frame pre-market. And so again, just a nice guide for clarity to not be faked out, because we know with megaphones, they break support with no follow through and they break resistance with no follow through. I like the S&P 500 a little bit more clear than the NASDAQ, but they were both doing very similar things. So once we started tightening up, after our first hour and a half of trading, we could easily say, this is not like yesterday. So yesterday was a complete bear control trending day. Today, all of our sectors were weak at the open, but XLV healthcare was not. So we did not have a scenario where all of our major sectors were hitting low of the day at the same time. So we did not have the same amount of bear confidence as we had yesterday. And then as we continued to tighten up, it became clear, this is a range bound day as opposed to a trending day. So I personally would trade much more actively on a trending day that has lots of follow through and wide ranges versus a constricting day. And that's me personally, but still traded in few directions, which we'll go over here. So semiconductors stayed relatively weaker. How do we know that? Well, we dropped down very notably. We gapped down and saw weakness on the morning. The hourly RSI dropped down close to the teens. It got down, got to the mid to lower 20s at the low of the day. Little hourly bounce. We know hourly lower highs are the most likely result of the next bounce. And SMH has pulled back enough that next time we bounce on the daily, it's still possible to set a daily lower high, because resistance of 218.81 is currently about 5% plus from where we stand. So SMH still clearly weaker. AMD was a lead bear. It confirmed the bear flag. NVDA broke to a fresh fear low. No follow through. NVDA is keeping up a potential falling wedge. We've been watching this falling wedge. It's broken bull a couple times. I had it drawn here back at the end of May. Now we can draw it a bit differently with a new lower high resistance level. We could put it like that, perhaps. Either way, what matters to me is the support breaks with a lack of follow through, as long as that keeps happening. I'm not buying these support breaks, but I'm just paying attention and keeping an eye on that. And MU is stronger. So if we have to rank the three from the last 2 weeks of trading, AMD is the weakest semiconductor, NVD is in the middle, NVDA, and MU is the strongest. MU, it looks like we got earnings tomorrow, so that could quickly change. Tesla, pull back today, hourly RSI, oversold into the hourly oversold bounce the second half of the day. That hourly RSI got down into the teens. And so the bears controlled the morning. Bulls finally changed the 5-minute trend eventually. Double bottom at the low of the day. Tight little range, broke bull. Have to change the hourly trend for a daily bounce to get any follow through. But again, I'm on the 2-day time frame for Tesla. Tightening up and looking for a break potentially next week. Low, high, higher low, double bottom, lower high, and bulls are trying to form a higher low compared to 626. Google, same deal. we're scouting a higher low, anything above 2100 for a continued tightening range. Amazon, same deal. We're scouting a higher low compared to 101 for a continued tightening range. But the burden is on the bulls to prove to us that they are showing up. Amazon stood out as a lead bull today. Again, these correlations are changing so quickly. Easy lead bear. What's today? Tuesday? It's Wednesday. Easy lead bear Monday and Tuesday. Easy lead bull. And I say easy just because it was easy to see it stand out. Why? We broke the low of yesterday with zero follow through. Look at QQQ. QQQ broke the low of yesterday with notable follow through. Let's look at the first 5 minutes or the first 30 minutes of trading. QQQ dropped for 15 minutes and then bounced. Amazon went up from the open. So the 15 minutes that QQQ is dropping, Amazon is bouncing. And so we were able to say Amazon is positioned really well if QQQ bulls can get a bounce going. And they used up all their momentum on the morning and set that high of the day fairly early, but clearly stood out strong from the open once the bell rang. So tightening ranges on all those names are going to be top watches over the next week. XLV is a potential daily bull flag. 1 day of pullback and now an inside bar. Again, it was the only major sector I was watching that did not break the low of yesterday, which had us able to easily say this is not the same big bear drop as yesterday where all of our major sectors are at the low of the day at the same time. XLV was on Team Bull and it stayed on Team Bull all day. It did not roll over. So if it's a potential daily bull flag that confirms, that obviously would increase probability that the S&P 500 can set a daily higher low. Bulls really need to set a daily higher low here. If we're going to keep this daily bounce going, we need that higher low and we need a green day tomorrow. If we break the low of today, it's going to be notable for me because at that point, we then have a bunch of space for a daily lower high to be the result of the next bounce. Watching XLV closely. Again, it's now the captain of Team Bulls as far as sector is concerned. As far as major sectors are concerned, it's XLV. So if I see XLV start to show relative weakness, I'm going to be a more confident bear. If I see it maintain its relative strength, I'm not going to be looking for significant further downside on the S&P 500 unless another major sector is falling apart. XLF was definitely weaker today, but anything above 3068 is a daily high or low. So I'm very unsure of the short-term action, and because of that, I'm mostly flat. And tomorrow's a big day for me in terms of determining whether a daily bounce gets going or not. IWM trying for a daily higher low to form, hourly trend change back to the bulls needed. So again, the hourly bounce into the end of the day. If we open higher, we need the hourly trend change to have any confidence. If we open lower, the bulls must hold that low of today to try and shape up the trend change. Biotech sector looks great. Daily bull flag on the table as long as EMA 12 support holds. So the names that I was looking for a daily higher low on, XBI and NIO. NIO bulls have significantly bought 2 gap down opens in a row. So yesterday we gap down open, and in the first 45 minutes we bounce over 5%. Granted, we gave a bunch back. We gap down again today. First hour and a half, we go up 8%. That created the space for an hourly trend change to try and shape up. So now we have the low of the day, high of the bounce, hourly higher low, and must hold level of 21.26. And if we break 22.28 tomorrow, our daily higher low is set. So that's shaping up to potentially play out. I chose the biotech sector today to be actively trading and actually shorted NIO. So let's go over a little bit of trade review, and I've got my orders here. If I'm ever talking about something in hindsight, don't worry, there's 1,000 people in the Chart Guys community that will keep me honest. Because if I'm talking about something in hindsight, I posted it in the chat room as it was happening, or I said it live as it was happening. There are some times where I take trades that I don't post. If it's extra high risk or if it's really fast and I don't have time to lay out the trade game plan. And on those trades, I don't ever talk about them in hindsight. It is a criteria for me that if I am talking about something in hindsight, I was posting it as it was happening. So I shorted NIO today because of a confluence of signals. So I've talked many times about how I've gotten familiar trading NIO and the character of this stock, where it loves to break support into bounces and it loves to break resistance into pullbacks. So I watched the high of the day, 22.25. At this point, I know we've bounced 8%. I know the 5-minute RSI got over 80. I know the 15-minute RSI was touching 70. I know that I'm just looking for an hourly lower high to be the result of this bounce, anything under 22.49 resistance from yesterday. So I know all those things. I then see a higher high with no follow through. Instantly, I think, keep an eye out for a rising wedge, because that is the trademark of a rising wedge. I then look at the S&P 500. This was at 10:40 a.m. Look at our rising wedge, or I should say our broadening wedge on the S&P 500. What was going on at 10:40 a.m.? At 10:40 a.m., we are right here, testing resistance. We've got a triple top. We've got an uptrending resistance line. That's what I call a confluence of signals. Everything that I just said on NIO, but most importantly, aligning with the broader market. If the S&P 500 rejects from this resistance line, a short in NIO will succeed. So I entered bearish on NIO. Short NIO on new high of day, no follow through. If I have a typo, it means I'm rushing. No follow through and SPY megaphone resistance, 1046. I very quickly was out 1/3 and put my stop at 22.31. So just over the high of the day at that point. Where are we, NIO? So I didn't get much wiggle room. I was talking about my entry at 1046 right here. So, and exited 1/3 very quickly to then essentially be risk-free. I think my entry was 22.17, exited partial, maybe 22.11. So I did have some risk still. It would have been small risk, but exited a third. I exited a second third at 5-minute EMA 12. Why? Because it had been holding the whole way up and we're still in a 5-minute uptrend. So I'm out 2/3 and then I let the last third ride and I watch this drop and I exit when the 2-minute stair step drop breaks for the bulls. And so that was at 21.38. So that ended up being a really nice short. And that was the only trade that I took for the first half of the day. And then I just patiently waited from there for something more clear to shape up. So that was an NIO short. I re-entered a third on this bounce, but putted around and then stopped out, break even, uneventful. From there, the next trade that I took, let's go with the short. So short the biotech sector. Why am I short the biotech sector? Because it's been bouncing all morning, and I know if we're going to shape up a daily high or low, an hourly trend change is needed. I am looking for hourly consolidation on my short. So what did I see? A setup where I had a nice clear amount of risk. So on this pullback, I look at this and say, well, that's a significant enough pullback for me to scout a 5-minute lower high to be the result of the next bounce. So we then bounce, and right around here, 240 is when I start scaling in short. So what's going on in the broader market at 240? We are pulling back notably. And what is standing out to me is relative weakness starting to develop in the biotech sector. Look at this relative strength. Why am I shorting a name that has relative strength? Because I'm looking for it to shift. So we are at the high of the day at 215. We are then dropping from 215 to 240 in the S&P 500. The biotech sector from 215 to 240 was dropping as well. And then we get this bounce for 15 minutes, 20 minutes to 250. The broader market to 250 gets this 5-minute bear flag, confirms it, and then a big bull move. So during that big bull move starts at 305 and goes to 325. The biotech sector from 305 to 325 is still dropping a bit. And we did get a little bit of a bounce in there as well, but it was much weaker. And it's hard for me to show it here on the 5-minute time frame because I was literally watching just tick for tick and on the 2-minute time frame and really zoomed in. But I entered bearish here. And really, this is where the relative weakness started to show for me. 250, 255. 250 and 255. So it was a bear flag on SPY. And when the bear flag confirmed with zero follow through, XBI confirmed and did see follow through. So essentially I started nibbling a position here. And this is an example of me starting to go aggressive. So I initially get a fill. I forget where, it's not showing it, but there's my first fill. I entered one position. I then entered double the position size at 37.79. I then entered triple the position size at 37.69 because I was waiting for XBI bulls to invalidate my thesis of hourly consolidation looking to shape up, and it didn't. I kept seeing rejections on XBI, couldn't get over 75.08, and so I then used that level and said, all right, if we break 75.08, I have to size down because I'm going real aggressive in my sizing. I then had 6 positions. And so if 75.08 would have broken, I would have taken off at least 2/3 and just eaten a real small loss very quickly. And as soon as we roll over in this 5-minute candle, I then get very comfortable because I now am profitable and I start scaling out fairly quickly because I'm in a very large position size. So I exit 1/6. Maybe exited another 1/6, that 74.69 support. Maybe exit another one there. And I say maybe because I don't have these all drawn out. But essentially, I had an average of 37.74, roughly speaking, and then just slowly was exiting. So LABD. So where was that? On here. This is the 5-minute consolidation that I was entering. So 37.74 support. If 37.54 breaks, I exit a ton of that position. It didn't, fortunately. And then I'm just scaling out. So I scaled out 2 positions before we broke XBI support. So I'm now down to 2/3 of that position. I exited more. 38.30s, 38.40s, and 50s. So pretty much this move is of just exiting. And that ended up being a day maker. And then I am now swinging XBI. I had zero intention of swinging XBI. So how in the world am I in an XBI position right now? Well, I then started to recognize relative strength in the biotech sector in the last 20 minutes of trading. And I was just watching the S&P 500 keep pulling back, and XBI was not. It was finding a base of support. I said, all right, I'll try one more little trade for the potential of an hourly higher low. I was looking for a 5-cent flip on LABU. And so I had a good entry on LABU at 675. It's almost right there at the bottom. So in at 675, I exited half at 682.5. So now my break even is 668. And so I was then just going to exit before the bell rang, but then I started to see more notable bull correlation. And the biotech bulls showed up with nice volume and a nice move. And so I then said, all right, well, I'm down to a swing size position by selling half already. I've got a lot of profit cushion to work with. If this is the hourly higher low and we change the hourly trend to the bulls tomorrow and set the daily higher low, I will have nailed that entry. If we open lower, we would have to open below this hourly support for me to then be in the red, a good bit below it. Because if my average, because I sold half, is 668, my average is, down here. So it's possible we open a lot lower, obviously, but I have enough profit cushion where I will give the hourly trend change an attempt because I'm scouting the daily higher low. The VIX still tightening up, nothing changing there. The dollar, still very strong. So this is a point in favor of market bears. But if you look at that dollar, I would have personally anticipated the broader market to have been a bit weaker today, which it obviously wasn't. But dollar is still strong. 10-year is a bit weaker. This is going to be key for me. Does the 10-year confirm or continue the daily downtrend, or change the daily trend to the bulls, setting a weekly higher low? So I'm keeping an eye on that to see how it shapes up over the next few days. Oil, daily consolidation underway after a bearish reaction to the inventory report. Energy sector had another beautiful short. So yesterday in the video, I was talking about this key 76.90s resistance. Look at that beautiful top fish. First thing, reject from 76.99 and dump all day. And bummed to not get that trade. I generally don't like trading in the first 15 minutes when I'm live streaming because I'm very distracted trying to convey information about our major sectors during a pretty key period of the morning. And after the first 5-minute candle, the trade was already running away. So it would have had to have been something that I was looking to enter within the first 3 minutes of trading, and I would have had to have been really aggressive to get that. But I know somebody out there got it, and I know one of you got it. So nice short, daily EMA 12 rejection. We now have a quadruple top just under 77. I was on the live stream pointing that trade out. I said stop loss would be at 77.01 to allow that psychological level of 77 to act as defense for bears. And so now the question is, do we confirm continuation to the downside, or can bulls hold 69.47 to try and shape up a daily higher low? So a lot of trade review in there, but a solid day. So I don't know what we're going to see tomorrow. I know the biotech sector is showing me relative strength. I know I have a megaphone support and resistance line to be keeping an eye on. I know the broader market is sideways. I know the Bitcoin crypto space got a little bit of a bounce going here into the end of the day and into the close. Nothing very meaningful, but willing to risk some profits for the potential attempt at a daily higher low in the biotech sector. I still have a small amount of SQQQ position as a swing. I closed out all of my SPXS, and we'll see what tomorrow brings. Do good things. Thanks for tuning in. There's a murder of crows out there. All right, the space room is coming to a close. Daytime version. This is my friend who has never painted space before, certainly not in mural form. I'd say he did a pretty good job. We'll do daytime version and nighttime version. The stars on the board head here are the constellations from when I was born. Nighttime version. So we got cotton and a few LED lights under there, and there's an app that does all kinds of crazy stuff. And we got a projector that makes the wall move. Pretty cool.